Alright, so I'm gonna go ahead and make this video early in the day, but really a pretty simple day if you really think about it. I think the first here, just make it easy. Look at the first two bars of the day. Look at these two bars, two dojis. Even the first four bars, you have three dojis here and here, trend bar here, doji here, and then we burst up to the top, and then we got bad follow through. Trading ranges are constantly, they reverse, and there's always bad follow through. Look back to Friday's a good example. Here, gap down, so you have to always think about the low yesterday. Bears they're weak, and then we had a breakout, a bad follow through, consecutive bull bars, a strong breakout, and follow through. Much different from today. Here we had a tail and another breakout, but we couldn't get to the moving average. So yes, traders will buy for a swing, but the key is to notice this. Here's the close. So look what happened here. So many traders wanted out that price could not get to this close and it reversed. So traders gave up here. Scaling bulls, they buy here. Whether or not they buy more lower, they got out. If you notice this, look what happened here. Arguably bulls bought this close and this low, tried to get out at their average price because they were disappointed. So since this is a trading range, it had trading range price action the whole way down. You had breakouts with bad follow through. Here's a breakout, bad follow through, breakout, bad follow through, breakout, bad follow through, breakout, bad follow through, breakout, okay follow through. So you have to be thinking about the possibility of a measuring gap takes you somewhere up to here, although I really don't think we'll get it, but we might. So anyways, lots of breakouts, lots of bad follow through, channeling down, but the bulls, bears sold every moving average here, here. Finally, we fell below the low of the day and turned up. So one thing you have to think about is some bulls will buy. Here, I'll just draw it first to show you. So they buy this close, they buy more at the low of the day. They're disappointed enough where they'll get out of break even, which is right here. I think the key thing about, I'm sure it's easy to think, how can we rally, get a new low, and then rally back to the top? Well, when you think about it, it's pretty simple. Bears made money selling above bars. They sold here. They sold the high of the day, made money. They sold above here, made money. Bulls made money buying below this low, scaling in, buying below this low, scaling in, buying down here, buying down here. So it's all common sign trading range, right here. Bears made money selling this high and up here higher. So currently, two obvious things. One is the open of the day. Next is the high close of the day. I still think we might test up and at least go one tick above to let traders out. But, just look at the day as a whole. It's trading range. Look at a 15-minute chart. Lots of reversals. Channeled down, channeled up. We'll probably close somewhere up in here. Yeah, it's really not a lot to say about a day like today. It's just a simple trading range. Another thing to think about, such as when you see things,
different ways to
Alright, and this is what I was talking about. Trading range closed the gap. We just tested the open of the day. It was a low 4 short. You had a, you call it a low 2. Leg 1, leg 2, full breakout to second leg up. So 1, 2, 3, 4. You can call it a low 5 if you want. Double top, they'll break out of double top, 2 pushes up. So low 1, low 2, low 3, low 4, low 5. Really doesn't matter. Bulls gave up here. Question is, will we get bad follow through, or will the bears get follow through? The bears want to test down to the low of the day. Part of this is about the daily chart. So what's most likely is probably, a close around this green line the open of the day. We came within one tick, 46.25, 46 even. So we came within a tick, so it's reasonable enough test of this high close, and obviously traders were happy to get out when it came close to it. So strong enough breakout, we'll probably get a little more down.
If it is.
Alright, and so basically, once again, bears gave up, bad follow through, low 1 short, probably buyers soon below, if not here, maybe here. Large trading range day, so I'm going to assume we're going to close around the open. Low probability we get back down to here. It's trading range, you can buy or sell just about anywhere. Compare it to, kind of like here, except this is more of a bear channel. This was yesterday. Sideways for 12 bars, bear breakout, but we went sideways for the first hour, so it's going to be a magnet. Here, much different. Strong breakout, strong follow through here and here. Sideways for a few bars, but bears couldn't get consecutive bars. Another breakout, probably strong enough for a second leg up, just as this was strong enough for a second leg up. Another leg up, but probably strong enough for a second leg up. So, we got that here. And then at this point, we're developing a trading range. So, what do trading ranges do? They fall below obvious support. Obvious support would be this low, maybe even this low. Trading range day here. Clearly a trading range. So, what's obvious support? Well, obvious support is going to be higher lows, breakout highs. For instance, this high, break even
if it were.
So yeah, but overall not a great day for swing trading. It's a limit order day. You have to assume the market's very forgiving on a day like today. So scaling in, if traders willing to scale in and manage trade, they'll make money. If they sell this high and they sell more up here and use the stop, maybe a measured move up, they'll make money.
You can see it.
So, prime example. Sorry, here. Back to where I was. So here's an example of what I mean by, the market. It's magnets, support and resistance. So, trading range day. Clearly a trading range at this point. You could argue, we're channeling up, so we're in a trend, but it's really, breakout, bad follow through, breakout, bad follow through, breakout, bad follow through, breakout. At some point, it's going to evolve to a more clear trading range. A trading range. So, price is going to fall below something that's obvious. This low, this prior breakout, maybe even this low. So, trading range is notorious for if you put your stop in an obvious place that would work in a trend. In a trading range, it's not going to work. So, for example, we have a measuring gap. Traders who put their stop right here, it was only a matter of time before they probably lost because it's not a trend, it's trading range. Bears made money ever since this bar. They made money here, here, here. So when we break above here, they're probably going to make money.
The bulls, high 2.
Alright, that's all the time I have, but I'll talk more about it later. Main thing to take away from a day like today, breakouts fail. Breakouts get bad follow through. Bad follow through equals trading range. Trading range means any move's gonna be limited. So the whole point, if you buy here, it's only a matter of time. You only have a limited amount of time to take profit. If you sell here, you only have a limited amount of time to take profit. Trading ranges always come back to your entry prices, simply because traders are baiting everything. All right, hope everyone has a good day.